There's very few mines coming into production in Canada, Tier 1 jurisdiction, in 2026. I think we're the only one coming into commercial production in the year 26. And that creates a lot of opportunity because we are undervalued. So for people looking for an investment that's leveraged to gold now and undervalued, I think West Red Lake is the perfect opportunity.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
Welcome. This is Financial Survival Network. I'm your host, Kerry Lutz. We are coming to you with Shane Williams, President and CEO of West Red Lake Gold Mines, with a major sponsor update. In fact, it doesn't get any more major than this. Shane, great to have you back on the show. And just got the release today. You officially started commercial production. Congratulations.
Thank you very much. It's great to be on, Kerry. Thank you very much. It's nice to be on with some positive news and give the market some good update.
So you're officially a producer now.
We are. We're officially a producer. It's and what a time to be a producer. What a time. As we spoke just now, gold is rising every day. Who would have thought gold would be in this position, you know?
Yeah, well, it's the kind of thing we always knew it was coming. We just had no idea when. And it's great for you because the convergence of production, because pre-production, there's always obstacles. There's always challenges that you didn't anticipate. But a rising gold price makes up for all sins, doesn't it?
Yeah, these mines, you know, as you start them up, either there's a couple of things on your side. You need a gold price because it takes a while to get up and get at that rate. And so grade helps and gold price. If you have gold price, you have the wind is with you. And so that really helps in these sort of situations. Yeah.
So you declared commercial production as of January 1, based on throughput, operational stability. From an operator's perspective, what still needs to go right over the next 3 to 6 months for Madsen to truly reach steady state, risk-reduced production?
So, look, Madsen is now, we have that operational stability. You know, the first half of the year, you know, June, when we restarted again, we ramped up to that sort of 650 tons a day. We wanted to get there. And then we set that as a base. You know, we set that as a base for 3 or 4 months in a row. And then now the next stage is to ramp from there up to 800 tons a day. So, you know, between now and probably the second quarter, we'll slowly ramp up and in stages, because it's all right to ramp up, which is good, but you got to stay there. That's the real key to these operation mines, and get the sequence. So that's really the sequence now. We're also heading into this area we call treble 47, which most of our drill results were last year on, and very high grade area. Lots of good drilling. And so again, that's a good tailwind there, in the sense that we get there and then we can ramp up with this higher grade material in the first half of this year.
Right. Well, now that you got steady throughput, grade is everything, right?
Yeah, grade is everything. And Madsen is the kind of deposit that there's grade hidden everywhere. So, you know, this treble 47 area was one we drilled all last year, and now it's in the mine plan. And they're actually starting in a new area called the 960. It's the bottom of the Austin area. I think it's in our presentation. You'll see this is another potential treble 47. So you're going to get these high grade zones within the overall ore body, which always helps. And, you know, as you said, as we talked about, you either have grade on your side or gold price. And we have both, actually, as we move forward.
You know, the Madsen history has definitely been a weight on the company, on West Red Lake. But obviously, it's completely different operation now. The main operational cultural changes that you implemented to really bring the mine onto production, what were the main ones?
Yeah, I think it's the stability and the bringing on good people. You know, as at the start, you know, it was when we bought the mine, it was like myself and a few people who were left over from the pure gold times. And so we started again, we rebuilt. We have 250 people now on site. You know, we're a full operation. We managed to attract very, very good people. There was a bit of nervousness coming back to Madsen, but we've proven now that we can get good people, and those people are consistently delivering. So that's been very important as we get that culture back into the place.
Yeah, and I'm sure that now that you're in commercial production, the entire staff has breathed a sigh of relief that this is sustainable. We have employment stability now, which until you go into production, they don't know that, do they?
No, they don't really know that. And it's always a risk, it's always a risk at any time. And in the environment we're in, Kedri, as you know, there could be always black swan events that happen, and so getting to that commercial production is very important. You get that stability, you get consistent delivery of gold, and you get into a place where, and I would add to your listeners and viewers that, there's very few mines coming into production in Canada, tier 1 jurisdiction, in 2026. We've had a few in 25, but there's not many in Canada now. I think we're the only one coming into commercial production in the year 26. And that creates a lot of opportunity because we are undervalued. A lot of the companies, as you well know, have risen substantially on share price over the last 9 months. We haven't had that. So for people looking for an investment that's leveraged to gold now and undervalued, I think West Red Lake is the perfect opportunity.
Yeah, it's definitely time for a re-rating. And talking about the financial aspect, so you're expecting production somewhere 40 to 50,000 ounces of gold this year?
Yeah, I would say we haven't given guidance. We just want to see a couple of more weeks, see where we get to, but around that range, I would say, because we're not really going to get to that 800 tons a day. I would say to the second quarter. So, the second quarter will be a consistent run rate, but the first run rate will be a balance. So a balance of that is probably 40 to 50,000 ounces.
Assuming, let's just call it 4,000 gold, even though today, as we're speaking on Monday, January 12th, gold just hit 4,600. I remember the feasibility study was somewhere around 2,300. So cash flow wise, what does that mean to the company?
Well, and just before we get into that, Kerry, it seems ridiculous now, but when we did our reserve calculations for Madsen, we did them at $1,680 gold. So, we are going to do an updated feasibility study this year because we have Rowan. And so the idea is to bring Rowan and Madsen together as one project and really show the potential of Red Lake. And so, when we get a chance to do that, we'll use a much higher gold price, both on the reserves and on the economics. And that makes a huge difference to Madsen. Madsen is a fixed cost mine, and production makes a big difference to Madsen.
Looking forward to 26 and producing that 40 to 50,000 ounces. What's it mean for the bottom line?
Yeah, it means Madsen generates at that sort of range around 50 to 60 million dollars of free cash flow.
So you'll be able to use that to finance the other operations and the expansion. And is there an expansion down the road as far as my mill capacity goes?
For sure. We are advancing. As we said, we came out with a PEA on our Rowan property this year, which, we're in permitting of that. So that's another 35 to 40,000 ounces a year that kind of come in. So there's a pathway to 100,000 ounces very quickly. And also now with the cash and we're generating, we'll be able to explore the deeper parts of Madsen, which is really exciting because, the top half has been mined fairly well. But, when we get down deeper now, we're drilling much deeper and we're finding, these really high grade areas down deep in the mine. And this is really exciting. The 8 zone is not far away. We can drill down there. So, I expect there'll be a lot of positive news in 26 as we advance.
And the important thing is de-risking is complete. Optionality kicks in. What do you think the market is still missing about West Red Lake Gold today?
So I think that the hangover is still there. Even though we keep delivering and we say we'll get a feasibility, we say we'll ramp up, we say we do our bulk sample, we've said we're going to be in commercial production in Q1. We've kind of beaten that just in early Q1. I still think there's a bit of skepticism, but every step we take, Kerry, we make another step, another positive, you know? I think for me, the real one is that, you know, when you look at our peers and how much they've run in up in value and sort of thing, and then you look at West Red Lake and you look at where we are and you look at Red Lake and you look at the opportunity, I think that's a huge opportunity for a re-rate now over the next 2 or 3 months. And I suspect we will get a lot of inbounds and share price buying now on West Red Lake.
Well, you've certainly earned the respect of your peers as if you didn't have it already. And now you've delivered. You've done what you promised the market you were going to do. So it seems like a re-rate is inevitable. I suggest everybody go over to westredlakegold.com, get the notifications, track production, because that's what it's all going to come down to. Again, the ticker symbols, WRLGF in the US and WRLG in Canada. Shane, great catching up with you, for getting the latest info, and we're looking forward to the rest of 2026.
Excellent. Thank you very much. It's going to be an exciting 2026 at West Red Lake Gold.
The Financial Survival Network.